The financially illiterate left seems to be cheering for recession, and I'll tell you why. It's funny how when the stock market's down, it's not Biden's fault, but when it's up, it's thanks to Biden. Same goes for gas prices. And I'd rather pay an extra 30 cents for eggs if it means that people are taken care of. And now they're like, eggs! All right, first let's start with the basics. What is a recession? A recession, generally speaking, is 2 consecutive quarters of GDP decline, or a significant financial downturn consistently over time, like a number of months. The leftist soggy media cheered when the GDP declined in the first quarter of this year because this was an indicator that Donnie is bad, even though Donnie was not in office for the majority of the first month of that quarter. But whatever, let's leave that out. There's something very important to understand about the stock market and also about GDP. First and foremost, over 20% of the United States GDP is government spending. Under Biden, it was 21, 23, 24% for year over year, which means that in the absence of government spending, we would have been in a recession under Biden. And we did have negative quarters of GDP decline, but they claim that that didn't matter. But they love cheering for it because it makes Donnie look bad. And though there's a multitude of factors that are considering when measuring whether or not the US is in a recession, GDP is not necessarily the best indicator of that. As economist Peter Schiff has suggested, is it good if there's GDP spend because there's some natural disaster, for example? If there's a tremendous natural disaster that causes the federal government and a bunch of people to have to rebuild their houses or rebuild their cities or roads or bridges or whatever, that's considered in the GDP. If there is not a natural disaster in a quarter or in a certain period and that money is not spent, it decreases the GDP. So are disasters good? Are things that you don't want to spend money on to replace things that you already have? Is a decline in that bad? There's a lot of different factors at play here. That's kind of the point. But the left, who is very soggy and very anxious to jump on any possible negative story that paints Donnie in a bad light, is basically cheering for this. Donnie doesn't know what he's doing. But they completely ignored all the ridiculous price increases in every single commodity, every single food price, gas, and everything else for the last 4 years. But they love jumping on this economic bandwagon now because it's convenient for them. But they don't care about prices, they don't understand finance, and they certainly don't understand the stock market. Like, do you really think Harry Sisson and these 21-year-olds that hold no stock and have not even known anything about the stock market for the majority of their very short adult life, do they really understand it? Or are they just quite literally being financed by a multitude of different groups to push whatever the leftist talking point is of the day? Are they ever critical of themselves? Never. Because they're literally independently lobbied propaganda arms that happen to be Gen Z. But in their defense, it's not just them. It's other people like clowns like Don Lime. Part of what fuels the idea that the United States is in a recession would be job growth and unemployment claims. And in the case of Joseph Garbinet Byron, a lot of the things they talked about was how many brand new jobs there were. I created all these jobs. When anybody with a half a brain understands that a vast majority of the jobs that were supposedly created under Byron were just replacements of the existing jobs that were lost during the mysterious period. A very small number of new jobs were actually created under Garbinet. And what's hilarious about it is a massive chunk of the new supposed jobs that were created were government jobs, aka taxpayer-funded jobs, aka the least efficient and most unnecessary jobs. So you can pad the numbers by borrowing more money to finance inefficient jobs that take those people out of the productive private sector and say, look, there's all this job growth. And as a new era of leadership takes shape over the course of this quarter and last quarter, it's only natural to understand that if you remove a bunch of government waste and spending, and if you fire a bunch of government workers and eliminate all of that spending, there's going to be people that are unemployed, and there's going to be a lot of uncertainty. And that uncertainty comes back to why the stock market behaves as it does. Generally speaking, the stock market ebbs and flows and has gigantic peaks and valleys all throughout its history. This is really nothing new. And the percentage decrease in a single day is relatively insignificant. It's really how you have to look at the market over a quarter or even over 6 months or a year, not so much the day-to-day. That's relatively insignificant as the market can swing violently even just inside one day, let alone from the beginning of the day to the end. So although it's certainly something to pay attention to, it's not necessarily an overall indicator of the world as a whole, because the stock market is based on perceived value in the future. I believe Warren Buffett has referred to it kind of like this, where it's like, if I have to sell a gas station right now, today, I have to sell it immediately. chances are I would get a lower price for that gas station. Whereas if somebody had several months to look at the traffic of that gas station, take a look at the marketplace, see how it's behaving with current market conditions, I might get a higher price if I was to wait to sell that gas station to the correct buyer 3 or 4 months from now. Now I'm paraphrasing, I don't know exactly how he referred to this, but that's the general idea. So the point is that when there is uncertainty, people are willing to sell at a lower rate. So if people are unsure because of tariff fears and the media going absolutely nuts and they hate Donnie or whatever, and there's turmoil overseas or whatever, somebody might be willing to sell right now to take the cash off the table and then maybe rebuy into the market in 3 months, which explains partly why there's a stock market decline. There's a lot of uncertainty about future earnings because the tariffs haven't shaken out and we don't know exactly what's going to happen. On top of that, March is not really categorized as one of the stronger months in the stock market indexes anyways. It's not the worst, but it's certainly not the best. On top of that, you have a lot of different positions that have been really ripping for a really long time and in a lot of ways are overpriced. And much of that has very little to do with the administration that's in charge at any given time. I generally speaking don't like when anyone on the right or Donnie or whatever cites the stock market as some indicator of a great job done. Because when you do that, which Donnie has done, that means that when it goes down, it's your fault as well. So you can't really have it both ways. It's best to just say the stock market is the general disposition of the business and the general population about where the economy is going to go, irrespective of the administration in charge. But very cheap money, interest rates, and a multitude of other factors play into it. And by all accounts, the stock market up to this point has been considered very overpriced. So this is what's more likely referred to as a correction than a recession. But it all remains to be seen. And to give you like a basic overview of what I'm saying here, you have to consider the PE ratio of a stock. The PE ratio is the price of the stock compared to the earnings of the stock. Meaning that if a company had a PE ratio of 10, that means the price of the company as a whole is 10 times the earnings. A traditional PE ratio of a strong company that's existed over many years is usually somewhere between 10, 15 to as high as like 25 or 28 if that company is growing. To give a comparison, even after the 30% decline, Tesla, for example, is still trading at a 108 PE. Because a lot of people thought and believed and probably still believe that Tesla as a company will continue to grow and make a lot more earnings. So if a company has been, let's say, making $10 billion a year, and then the next year it makes 10.2, and then the next year it makes 10.5, your PE ratio might be smaller because the company is not growing by leaps and bounds. Whereas if a company is going from 10 billion to 15 billion to 20 billion to 25 billion, you may have a PE ratio that's 30x or 40x or 50x or something like Tesla. Because you believe that the growth is going to be so explosive that present day earnings are not an indicator of where it will be in the future, which is how the stock market is priced. An estimation of predicted future earnings. And in a time of uncertainty, a period of uncertainty, whether that be a week, a month, or a quarter, that in and of itself causes the stock market to decline. It's more about the news. It's more about the hype. It's more about the attention. It's more about the general sentiment right now than it is about the bottom line financials and fundamentals of those businesses. It's the public opinion in the now. It's the fundamentals in the long term. So in conclusion, to wrap it all up with a nice little bow, the stock market is the present estimation of the value of future earnings. And in the event that we understand that government spending makes up 20+% of the United States GDP, and a big chunk of the supposed new jobs were government jobs that are now being removed for waste, fraud, and abuse and reckless spending, a lot of those companies that are traded on the stock market are wondering, well, now in the absence of potentially government contracts being taken away, will the earnings for those companies go down? If the government, which is spending a ton of money, isn't buying contracts for X, Y, or Z, will that company's earnings be affected as a result? With all of these people that are going to be unemployed, for example, that used to work for the government, are they going to not buy as much coffee, not buy as many pairs of clothes, not buy as many sneakers? Are they going to reduce their air travel? Are they going to reduce their spending because they don't have a job? Are they going to buy less gas? Are they going to repair their car less frequently? Are they going to get less haircuts? All of these things create uncertainty, and the general disposition of the marketplace, especially with the mainstream media hammering it, is I'm afraid. When people are afraid, they sell. They retreat, which poses a real opportunity to astute investors and wealthy people. In the stock market and in the investing world, there's a concept called dollar cost averaging, which is where you consistently purchase at about the same amount of money a stock or position over time. meaning that you buy the stock when it's up and you buy the stock when it's down. And when you're buying the stock when it's down, you're acquiring a higher volume of shares. So as that company grows, theoretically over time, you shake out on top. Now, this is not financial advice, but wise investors generally follow this practice. For comparison, I think about a month ago, Nvidia had the largest single day drop of, I think, any stock in history because investors got spooked about a new AI that was doing the same thing for less money. And although everybody yelled and screamed about this drop, within about a week or two, the stock had retained right back to where it originally was and actually went up even further than it was before. A lot of it's hype, a lot of it's chaos, and a lot of it will shake out in time. In the meantime, stay vigilant, but just be aware that the left is cheering for this because it makes them look good. And this is not to say that we won't have a recession, but they don't know any more than you do. They're just cheering for it because it makes their policies appear to be better and superior. Don't fall for it.